Hey folks, Dan Frio here, the opening bell with Dan Frio. I, of course, am Dan Frio. We're going to talk about next is inflation, the relief packages that are going out and have already gone out. What's that doing to stocks, crypto, real estate, and bonds? So don't go away. We'll be right back. Okay, so in a normal market, what I can normally do for my clients, as well as even in my investments. So let me just tell you a little bit about myself. My name is Dan Frio. I do the rate update every day at between 4 and 5 o'clock Central Standard Time. I'm a mortgage lender, have been doing it for over 33 years. But I thought of this. I have a YouTube channel that I do, and I got about 12,000 subscribers right now, and I'm picking up about 100 a day, which all of a sudden everything's starting to take off. And I think one of the components of that is the opening bell that I'm trying to put out there and educate people on the simplest format I can. Just to say, guys, in your lifespan, here's the investment options you have, and I try to put it in its most basic terms. At any age, you can invest in stocks. So we focus on stocks, and I give you my specific areas that I focus on. And basically what the channel is for educational and entertainment purposes. I'm letting you know what I'm doing and the mindset that I have in my investments, in my real estate piece, in my cryptocurrencies, am I in cryptocurrencies and so forth. And that's what I basically try to explain here, in its simplest forms. Basically, at any age. I have a daughter who's she's in her senior year of college, and any money that she has, we haven't invested, or I'm showing her how to invest. My other sons, we go through it, and we'll sit down every once in a while, and we'll go through and discuss, going back and forth. How do you buy stocks? Over the last few years, how do you buy stocks? How do you buy cryptocurrencies? The company you might like, but how do you dissect it financially and so forth to figure out that part of it? So the first step is, invest your money, because in your savings account, you're basically getting a 0% return. So we always talk about inflation and Treasury yields and things like that you hear in the news, but you're like, okay, inflation's going up, who cares? Well, when inflation goes up, it deteriorates the dollar, it eats into company profits and so forth. So as the higher the inflation goes, companies are now going to be less profitable. The dollar should be impacted negatively. So there's repercussions of that. We watch the 10-year Treasury note on this channel, as well as my channel in the evenings. Why? Is because there's a yield on the Treasury notes that can affect the stock market. Here's how that works. Let's say, for example, and we'll go through my channel, you have 4 investment scenarios: stocks, crypto, real estate, and bonds. Okay, most of the time you don't invest in bonds until you're later in life. You're happy with the 2, 3, 4% return on some kind of bond, unless it's junk status, it has higher yields, and you're like, it's better than my savings account, but it's I could probably get a better rate of return in these other investments. However, I'm at the age, I don't want to risk it. I don't want to lose. I just want to say, okay, I'm going to get 2 or 3% a year. Maybe I'll miss out on that high flyer stock, but I know I'm going to get that return. I know I'm not going to lose my money. Okay, so bonds usually, I don't really talk much about that on this channel. So we have stocks, crypto, and real estate. Okay, so that's where we kind of focus here. So at any age you can buy stocks. At any age you could buy crypto, but that is more of a risky play. But again, if you're in a new job, you have some money that you want to invest, I always say take a small little fraction and invest it in some risky stuff. Like in today's world, what I'm looking at is cannabis and cryptocurrencies. Okay, so I'm trying to just explain to you my thought process, how you can scrub through things, where do you even buy stuff from, and so forth. So that being said, let's walk through just my Monday morning setup and how I look at things. Now I do it all weekend, but how I look at things on Monday. So I get in and I go to some of the areas that I focus in to get my information. And this is in its generic terms. I dig in a lot deeper, but on your side of it, if you're new to a lot of this, I suggest you go to Yahoo Finance, CNBC. Sign up for some newsletters. If Yahoo Finance has a newsletter that comes out every morning, sign up for things like that so you can get it. I can't teach you in watching this for 5 minutes a day everything about stuff, but what I can at least do is guide you down a path to teach you to fish. If that makes sense. Instead of giving you a fish, let's teach you to fish so you can be a better financial steward of your money. So we go in, and like for today, you're starting to see, if you're new to this now, or you've been involved for a couple months, you're going to start seeing Treasury yields are affecting the stock market. Okay, so what happens with that is people monitor, financial planners, wealth advisors, economists, and everything. They follow the 10-year Treasury note, and here's what they look at. What is its yield? Meaning, how much of a rate of return are you getting? Like, for example, your checking account is basically giving you 0. Okay? So if you can buy a 10-year Treasury and make 1%, cool. But how you compare bonds and stocks is in the yields that they're giving you. Okay? So you had the 10-year Treasury, and then you have the S&P. S&P reflects the stocks, Treasury reflects the bonds, okay? When the Treasury yield was basically at 0.4 to 0.9, that's the yield that you would get. The S&P dividend yield was 1.6. So you're like, okay, I can get 0.4. Let's go between 0.4 and 0.9. Let's say it's 0.7, okay? I can get a 0.7 yield on Treasuries, or I can get a 1.6 yield on the S&P. Well, it's double over there. So everybody and their mother's jumping into stocks, okay? Especially with a lot of the stimulus money coming through and everything else. If you have excess money, what I highly suggest you do is pay down the debt, any debt you have, especially if the debt is a high interest rate, and you invest in stocks. And that's what I do. Yeah, I've been advising my children to do this. Now what's happening is you have the 10-year Treasury yield going up and up and up. And again, there's not much risk here because it's backed by the government, the U.S. government. So it's not going to default. So now you have the yield going up and up and up and up and up. And now the yield on this is equal to or maybe greater than the yield on the S&P. So people are saying, I have no risk over here, and I can get a higher dividend yield. So I'll start selling some stocks and buying into treasuries. Okay, so that's why we focus on the treasury yields, because as they go higher and higher and higher, it's going to pull money out of the stock market. Could potentially pull money out of the cryptocurrency markets. Okay, so that's why we focus on there. However, in today's world, we're in times that we've never really seen before. The government is pumping money into the economy, just sending out checks and sending out checks and sending out checks. Let's say half the people need those checks and the other half doesn't. What are they doing with that money? Well, some are using it to survive, to put food on the table. Others are like, you know what, I over the past year or two, I've been able to pay down my debt because of the stimulus packages. I was able to do a forbearance on my mortgage, so I didn't have a mortgage payment for a year. I basically cleaned up my debt load. So now I have this excess money. I'm starting to pay back my mortgage, but I have some excess money. What am I going to do with it? Well, you have these options. You have stocks, bonds, and cryptocurrencies. A lot of people are very unfamiliar with cryptocurrencies, so they're like, okay, I got stocks and bonds. Again, if the bond yields are really low, you're going to say, the only alternative I have is to buy stocks. That's why we've seen this huge rally in stocks when a lot of times it doesn't make much sense. You're like, okay, half the world's shut down. So why is the stock market, booming? That's why. Okay, there's so much excess money, and you got to put it to work somewhere. You have to at least get 1 or 2% a year, or you're losing purchasing power on inflation. So inflation's about 1 to 1.5 right now. So if you're not getting at least a 1.5% return on your dollar, on your investment, you're losing purchasing power with your dollar. So that's why right now the whole economy is focused on monitoring yields on treasuries, the stimulus package, and the COVID, what's going on with COVID. The vaccine's out, positive. The stimulus package has passed. Positive. Treasury yields are up. That's a negative for stocks, but we're going to see a kind of a stagnation right now in treasuries as a lot of information is getting digested, as well as there's a lot of news this week that I want to explain to you that, what's coming out this week and how it will affect the markets. So let's get on to this piece of it. So you're going to see the headlines here: Treasury yields retreat. The good news is, let's go to all the way. I usually don't go this route, but Treasury yields right now are down 4 basis points. Perfect. Okay, that's what we want. We would like this number to be under 1.5. We would really like it to be under 1.4 or 1.3. But as long as this is staying stable or on the decline, you're going to see money pouring back into stocks, as which we're seeing today. So it says the headlines are right here. Stock trading mix, tech stocks rebound as Treasury yields retreat. And we just saw that on that last chart. So now you see right here, the S&P is up 23, Dow's up 44, the NASDAQ, which is tech heavy, is up 142. Okay, here's the other piece of the component that will affect the economy. Gas or oil prices. Oil is in basically almost everything, especially gas. So it's going to cost your, higher in fuel bills, higher in a lot of things. Plastics made with crude oil. A lot of stuff is made with oil, believe it or not. So as oil keeps rebounding and going up and up and up and up, you can see at the pump, prices are going up, and products, a lot of products such as plastics and things like that, are going up as well. So that's kind of a hindrance to the economy. Okay, but so we're trying to juggle all this stuff to see, what's a good investment to go, get into to at least get my 1, 2, 3% return on my money. Okay, so we go to the next thing. That was Yahoo Finance. Now we're at CNBC. Same thing. NASDAQ rises 1% as tech stocks rebound amid declining bond yields. So again, see the pattern here? We got bond yields, tech, which is NASDAQ, tech. Tech is the one that's more sensitive to an increase in yields. Okay, so that's why we follow that, because if you see bond yields going higher and higher and higher, you're going to see the NASDAQ, especially a lot of tech stocks, going down in value or down in stock price. Let's go over to our watch list. I'm going to condense this because I have people saying, Dan, there's a lot of stuff there to absorb. So I'm going to condense this watch list. This is my list of stocks that I either own or I am interested in owning. So I have a whole slew of them here. And the reason why I put so many in, I want to check and see what particular sectors are doing and particular individual stocks are doing. But my staples that I invest in and these are going to be tech heavy, and that's why I monitor bond yields a lot. Not only does it affect my tech stocks, it also affects my business in the mortgage industry. And I'll go over mortgage rates here in a second with you. So let's go back to our list. I own Google, Apple, and Facebook. Those are my staples. Google is basically flat today. Apple's up 2%, and Facebook is up 1.2%. Okay, that's good. Those are my staples. Now, what I focus on is, let's say, for example, you're sitting there and you're like, okay, this pandemic is going to end. What do I plan on doing? Well, what do I plan on doing? Well, I'm going to go out to dinner a little bit more because I can get out. I can go to some bars, see some music, go to ball games, go to entertainment stuff. I can fly. I own a property in Florida. I fly to Florida more often. And those that watch my channel religiously, every time I go to Florida, for some reason, stock prices plummet, mortgage rates go up. So I'm going to try to do that incognito because I don't know if the stock market wizards are watching where I'm going. And every time I leave town, they start playing havoc on the market. That was a joke. But let's get into that realm of things. So my focus is let's say, okay, oil prices are going up. So what do I plan on doing? Well, Disney, recreation. You're going to have tons of people going to Disney. They want to take their kids to Disney. They want to go on a Disney cruise. During the pandemic, they got Disney Plus. The balance sheets of Disney, if they got through this debacle in the past year, they're going to be much stronger. So that's my play on recreational. The other piece of the puzzle is the green energy. The Biden administration is pro-green. No problem with that. So how do I play that? Electric vehicles. Tesla is a good play there. Tesla is really volatile, and it's not for the weak of the stomach. I'm playing it. There's GM and Ford. I play this realm of things. Ford. I own a Ford vehicle. I love it. I think it's a quality car as they move closer and closer to the electronic vehicle piece of things, which they're in the works right now of merging with another company. That I think Ford is going to be a great play there. So I own Disney and Ford. The other piece of this puzzle is as bond yields increase and rates increase, that is good for banks' bottom lines. So how do you buy a bank or a financial? How I buy it is I don't really try to focus on individual stocks, because let's say I go to and I buy Bank of America or Citibank and they just come out with some bad news. That individual stock could plummet. So how I buy it is an ETF. ETF is a basket of financial stocks. Might have Bank of America, Citibank, Morgan Stanley, blah, blah, blah. It might have a basket of all these stocks. It helps me diversify that investment. Okay. Now my speculative plays are cryptocurrencies and cannabis stocks. So let's dig down on a lot of these areas that I'm participating in, I guess is the best way to put it. So we get out of that. Now we scroll down a little further and we get into the cryptocurrency area. Now these are for not at the faint of heart, because these can go up 20-30% a day. But as of today, here, let me backdrop again. You can buy Bitcoin Cash, Ethereum. You can buy a lot of cryptocurrencies. How I buy it, I go through PayPal. PayPal, you can log in, create an account. You can buy cryptocurrencies right on there. They'll store them for you and no storage fees. And it's a good way to play that environment there. If you want to buy directly, let's say you want to buy gold, you go out and buy gold directly. However, you can buy gold stocks. You can also buy cryptocurrency stocks. Basically, all these companies, they are in existence to they buy and hold these cryptocurrencies. So I have a position in Grayscale Bitcoin Cash. Here's the ticker symbol. And it is up 1% today. I own Grayscale Bitcoin Trust. That is Bitcoin. So this one ultimately is Bitcoin Cash cryptocurrencies. This one is Bitcoin. You've heard of that. This one is Ethereum. Those are the positions I hold. I used to have a position in Litecoin. I depleted that position and added to my Bitcoin. So these are the ticker symbols that you can buy and trade stocks that will reflect cryptocurrencies. Okay, so that's that part of the equation. Now you go down to the XLF. This is my financial sectors. It's down 1.2 today. I'm fine with that because I'm not going to buy at the ultimate bottom and I'm not going to sell at the ultimate top. But I think long-term strategy is a perfect time for me to get into this area. Okay, so I'm in that. Disney up 1.77 today. I think this is going to be a gold mine in the next year or two. That's why I do that. The other place where I advise my children to buy is you need a good financial advisor. Well, you either have to go out and hire somebody. Well, if you have a couple $1,000s to invest, that's not prudent. Well, how about if I hired Warren Buffett? He's the world's #1 stock advisor, picker, manager. Well, I can buy his stock and let him manage it for me. And I have a position in Berkshire Hathaway, share of the B share. It's down 0.17, very, very well managed. Okay, so those are the positions. Tomorrow we're going to talk about some semiconductors, and the other area that I want to focus is on energy. Okay, so then we're going to talk about those tomorrow. Cryptocurrencies, where are we with those? Well, right now, Bitcoin is down 0.23, Ethereum 0.3. That is really odd because usually you see returns like this. Look at XRP. It's up 13% today, 28% over the week. So those are, these are flat. I'm fine with that because they're condensing. I think they're consolidating a little bit, and then they'll start going back up again. I predict this to be about 60 by the end of the month, and then hope the goal is for this to be about 100 by the end of the year. There's a lot of fluff behind a lot of these things. I'm just holding a small position in cryptocurrencies just to, I guess, join the bandwagon. I'll put it that way. I'll just be honest and blunt. I had positions in Litecoin, which is right here, and Bitcoin Cash. You see Litecoin's up or down 5% for the week. Bitcoin Cash is basically flat. So all those are flat. I'll take that. I'd rather have that than red. Okay, so I go to cryptomarketcap.com, get data from there. There's a slew of other cryptocurrency websites that you can get into to just watch this stuff and learn about it. That's the basic thing is, like I said, the channel is basically to teach you how to fish. Is the best way for me to explain that. What's going on with the dollar with all this stimulus and everything else? It's starting to deteriorate. That's expected. So guys, you might say, well, Dan, you keep saying the dollar is going to deteriorate because of all this, stimulus package and stuff. Guys, it's not it's not a little motorboat where you just turn it. Think of it as a huge cruise ship. Well, it takes time for that thing to turn. It's not going to turn on a dime. So it takes time for all of this to cycle through, as well as like inflation. You're not going to see inflation tomorrow go sky high 6 months from now, 12 months from now, 18 months from now. Will it be up? Yeah, it'll be up. So let's now go on to what I do for a living and why people follow my channel normally is to find out what's going on with mortgage rates. That is this number right here. It is flat. I will take flat all day long because here's what's going on. Look at this. Look at that run. This is what's going on with the price of a mortgage-backed security bond. This is the bond that trades on Wall Street that is the biggest component of your mortgage rate. Okay? That's this. As the price goes down, mortgage rates go up. Look at that decline. Now, if this was a stock, you'd be like, holy crap. I'm getting out of this thing. Well, it's been bad. Rates are up about 50 basis points in the last 2 months. Have you missed out on the lowest rates in history? Yep. Have you missed out on a refinance, maybe saving you some money? Nope. Most people were at 4.25 or higher. Rates are still in the mid threes. Okay, so you still have some leeway there on what's going on there. The 10-year Treasury, as we just saw, this is actually down a little bit more than where we started. This is live. This is going on tick by tick, so you might see this change as we talk. So I follow this on a daily basis. If you're a realtor, a mortgage person, a financial planner, or interested in the mortgage markets and so forth, follow my channel. I'd love to have you follow me. And we talk about what's going on in mortgage rates and what's going on in real estate. The economic calendar for the week, Federal Chairman Powell is talking today. It depends if he sneezes or wipes his nose, what's going to happen with rates. I'm just joking, because everything he does and says is put under a microscope. The rest of the week, we're going to have things that the Federal Chairman Powell is going to talk throughout the week. He is the chairman of the Federal Reserve. He has a lot of power. When he talks, people listen. He's going to talk throughout the week, but we also have a lot of information coming in on purchasing pricing index, domestic product analyzed, continuous jobless claims. There's a lot of inflation numbers here, as well as employment numbers that are coming out later in the week. So as the week progresses, we're going to have probably more and more volatility in the stock and bond market because of this. So I hope you like my channel. If you get value in that, please check me out at the Rate Update with Dan Frio on YouTube. I have about 800 videos. Most of it does talk about mortgages and housing and real estate, but we have a lot of information here. We started about a month ago talking about the opening bell. I discuss stocks, crypto, real estate, and bonds. So that is it for today, guys. Hope that you liked my video. Please give me a thumbs up, subscribe down below, hit the bell so every time I post a video, you get an alert. I will see you about 5 o'clock today with what's going on with mortgages. Take care. Have a blessed day. Bye-bye.